You can be forgiven for thinking that crypto bans are a thing of the past. With all that positive news that we've been getting about the broader adoption of Bitcoin, people have completely dismissed the risk. Yet in the past 2 weeks, we've had 2 very high-profile bans that took many by surprise, from countries that have seen some of the most widespread adoption. So, this has had me worried. Are we likely to see a dump in Bitcoin? Could it crimp demand, and are other countries likely to follow suit? Well, that's exactly what I'm going to cover in this video. I will give you folks the lowdown on the bans and what they mean for the global markets. I'll also be giving you my thoughts on where I see the price going in the wake of all this. So, miss it at your peril. Before we get going, I want you folks to meet Oshi. No, she is not a shill for Dogecoin. She is actually our new compliance officer. What's that, Oshi? Oshi would like you to know that I am not a financial advisor. So everything I'll be saying in this video is purely for educational purposes, and you should always do your own research. Thanks, Oshi. It's great to be working with you. So now that Oshi is a happy hound, I want to take the time to welcome all of those who are new to the channel. My name is Guy, and over here at the Bureau, we dive into everything crypto, from in-depth reviews to deep dive coin overviews. So if that is content you could value, gently flick that subscribe button. Ping that bell as well to get notifications when they fly out. It will make Oshi's day. Yes. And finally, we really value your time, so you'll conveniently find these timestamps that we've placed below. Use them to skip ahead if you're short on time, although I do encourage you to watch as much of it as you can. Alrighty folks, let's kick this off. Let's start with the first of those upcoming bans. This was the one that was put forward by the Indian government. The bill was officially disclosed 2 weeks ago and is aptly titled, quote, Cryptocurrency and Regulation of Official Digital Currency Bill. The main purpose of the bill would be to prohibit anyone from holding their private cryptocurrencies. And no, that doesn't just mean privacy coins. That means any cryptocurrencies that are not issued by a centralized authority. This probably includes all cryptocurrency that you're holding. The main goal of this bill was to pave the way for the creation of an official digital currency to be issued by the Reserve Bank of India. So basically, the Indian government wants to outlaw its citizens from holding their own cryptocurrency so that the RBI can issue its own central bank digital currency. I wonder if anyone could have predicted this. That's right, I covered it in a recent video I did on a cashless society. You can open a new tab in the top right and come back to that later. But that is neither here nor there. What you need to understand about this bill is that the government essentially wants to outlaw Indians from holding cryptocurrencies such as Bitcoin et al. I should also point out that this is not the first time that the Indian authorities have taken on cryptocurrencies. Back in 2018, a government panel recommended banning all private cryptocurrencies and also introduced a proposal that would jail anyone for up to 10 years if they held crypto. Now, this was successfully thwarted through the court system last year and caused many Indian crypto investors and exchanges to breathe a sigh of relief. Alas, that was short-lived with this recent announcement. Now, it is important to point out that this ban is not happening overnight. The government has given cryptocurrency investors a transition period of 3 to 6 months, where they can liquidate their current cryptocurrency holdings. How thoughtful of them. So, what exactly will this bill really entail? And how can the government enforce the ban? Well, perhaps the most likely route will be for them to completely restrict the exchange of fiat to crypto and vice versa. They could prohibit the cryptocurrency exchanges from offering their services to Indian citizens. This is something that the exchanges are themselves fearing, and, according to the Unocoin founder, if that is the case, they will have to move their business out of India. That's not the worst part of it, though. There is also the prospect that the government could impose criminal penalties on users who they find holding cryptocurrencies. So, even if users wanted to self-custody their cryptocurrency wallets, they do risk being tracked down by the government with the help of blockchain auditing firms. Okay, so that's the bleak prognosis on the India ban. Let's take a look at our next nanny state. I'll bet you didn't know that Nigeria was one of the most active countries when it came to cryptocurrency adoption. Yep, according to data from Paxful, a Bitcoin peer-to-peer marketplace, Nigeria is second only to the US in terms of trading volume. Last year, over 20,000 BTC was traded in Nigeria. You can also take a look at global search trends to get a sense of the adoption that has been taking place in the country. For the Bitcoin search term, it was the country with the most queries. Cryptocurrency took center stage in the country last year for two reasons. One of those was widespread anti-SARS protests, where Bitcoin was the only method through which protesters were able to collect donations. And then secondly, you had the notification from the Central Bank of Nigeria that international money transmitters like TransferWire were not allowed to operate. I should also point out that long before the protests and moves to limit money transmitters, Bitcoin was a pivotal medium of exchange for Nigerian importers. Given how unstable the local currency is, it's hard for these importers to buy dollars to pay their suppliers. Bitcoin solved all of that, as it allowed these importers to buy goods from outside the country much cheaper and more quickly than they would be able to do had they gone the traditional route. Here is the prime example of a mobile phone importer who sources his goods from China and the USA. Now, you folks want to see a crazy stat? On a single day in early February, the volume traded on the BTC Naira pair on Binance was almost 3 times the turnover of the stocks on the Nigerian Stock Exchange. Crazy shit. So it seems that in a country like Nigeria, Bitcoin was circumventing the state control and making the local currency useless. Heck, this is not even hyperbole. Let's watch this clip by a Nigerian senator, shall we?
Another very important thing that we should know is that Bitcoin has made our currency almost useless or valueless.
I tend to agree with him. But it's not just Bitcoin. It's because fiat is a fraud, a topic that I covered in my recent video on the greatest Ponzi scheme of all time. Anywho, this was the main rationale behind the move by the Central Bank of Nigeria to prohibit banks from dealing with cryptocurrency exchanges. Similar to the Indian ban that I just talked about, this would restrict the Naira to Bitcoin trade and vice versa. They used a whole host of nonsensical arguments in order to justify the ban. They even referenced our favourite no-coiner Warren Buffett when calling it rat poison squared. Now, unlike the Indian ban, this one was more immediate. The central bank issued a straightforward directive that banks had to close any accounts of those individuals who were interacting with cryptocurrency. Pretty nasty move, if you ask me. It's also pretty nonsensical. Bitcoin has so much adoption in Africa precisely because it helps the unbanked. Now anyways, despite how abrupt the ban was, it appears to be less severe than the Indian ban. This is mainly because it does not appear, at least on paper, that holding cryptocurrency could be considered criminal. Nevertheless, the difficulty that this was likely to impose on Nigerian Bitcoin users was pretty obvious. Here you can see some reactions from those within the country as they try to come to grips with the abrupt move. So, that's an overview of the respective bans. But the most important question is what this could mean for both the citizens of the countries involved and the price of Bitcoin. The first thing we have to ask is how can a country really ban a decentralized and peer-to-peer currency? There is no centralized issuing authority. It exists as a record on a decentralized ledger. You can send it to anyone as long as you both have an internet connection. Quite simply, it's nearly impossible to ban. You need look no further than the experience of Chinese cryptocurrency traders and users. Did you know that ever since 2017, Bitcoin trading was banned in the country? Well, you could be forgiven for not knowing that. This is because, despite this ban, China is one of the most crypto-crazy countries out there. It's also the epicenter for some of the most well-known crypto exchanges, VC firms, and of course, miners. Over 60% of global hash rate comes from miners who are based in China. Now, I should also remind you that this is China. a country that has some of the strongest internet security firewalls and surveillance systems out there. If these tools cannot be used to effectively clamp down on crypto trading, then you can be pretty sure that countries like Nigeria and India are going to have a tough time. So, how did this crypto industry proliferate despite the government ban? Well, I should point out that the ban was similar to the one that was implemented in Nigeria. Namely, the People's Bank of China, PBOC, prohibited banks from dealing with exchanges and other businesses that provide a bridge between fiat and crypto. You can see how that looks here. This is a chart that comes from the folks over at Masari. It shows fiat-linked Bitcoin trading volumes based on the currency in question. As you can see, between 2013 and 2016, the Chinese yuan controlled anywhere from 80% to 95% of global volume. Then came the ban in 2017, and these numbers fell precipitously to zero. But do you notice what happened after that? That's right. Tether USDT started picking up aggressively. Now, it's well known that USDT is used prolifically in the Chinese OTC market. Chinese crypto dealing just moved away from the centralized crypto exchanges to those peer-to-peer dealers. Chinese citizens can just as easily buy crypto through these local dealers or, if they want, create accounts at offshore exchanges through a VPN. Yes, there are occasional crackdowns from the authorities that try to target exchange operators and miners. Of course, we cannot forget the episode last year where the OKX CEO was taken in for questioning by the authorities. Yet, despite this, the trade goes on. Indeed, the PBOC has refocused its attention away from Bitcoin and other cryptocurrencies to their own e-yuan, China's CBDC. So, that's the Chinese experience. However, how could it play out in India and Nigeria? Well, the first thing that you should note about the Indian ban is that it's going to take its time to work through the numerous bureaucratic levels of the Indian government. For example, once a bill is moved for consultation in the cabinet, it has to go through the numerous ministers for feedback. Once this has occurred, it has to move on to the parliament. That's a whole other kettle of fish there, and it has to pass the, quote, House of the People and the Council of States. And you thought the US legislative process was lengthy. So, it's quite clear that there is still some time before these rules will be implemented. Now, let's assume that the ban manages to get through that archaic and complicated legislative process. They close down the exchanges and banks restrict their business. What's to stop users from just trading over the counter? What's to stop them from joining peer-to-peer networks and exchanging Bitcoin for cash and other payment methods? It's a rare asset that users in the country know can preserve their long-term wealth. Just because it will be harder for them to buy or sell in the country does not mean they cannot exchange it offshore for foreign currency. It would be akin to them holding a small Swiss bank account in their pockets. I should also point out that India has one of the biggest black market economies in the world. There are economic activities that take place without being recorded in the official GDP figures. And here's a fun fact. In 2017, the Indian black economy was about 14% of the entire Indian GDP. Mind-blowing, right? So, do you think in a country where you have an entire black economy, they'll be able to restrict the trade of Bitcoin? Pfft. I happen to think that we will see an explosion of OTC trading in India post this ban. I should also point out that India has banned certain banknotes in the past in order to combat this massive black market. The only difference is that in the case of the banknotes, the Indian central bank determines whether you can exchange it or not. Well, you can't do that with global digital currency. Okay, so that's what I think will happen in India. And if you think the government there is going to have a tough time, then the Nigerian authorities are in for an even bigger surprise. Given how restrictive Nigeria's banking system has generally been, as explained earlier, there's always been a strong Bitcoin-Naira OTC trade. You need look no further than the volumes being traded on the likes of Paxful and local Bitcoins over the past 2 years. Right now, you can hop on over to Binance's peer-to-peer exchange and you'll see all the buyers and sellers running a bustling trade. It's not as if this ban is going to drastically reduce the ability of these users to conduct their trades. Yes, it becomes a bit harder and they may face banking issues, but willing buyer, willing seller, none the wiser. Indeed, this is something that Binance's CZ actually alluded to in a tweet. P2P trading will flourish and has already begun to flourish. The only impact that I could possibly foresee from this ban by the banks is that it places a massive premium on the price of Bitcoin in Naira. This could mean that users may have to pay more for it than they would be able to get for it at official exchange rates on the global market. This is, of course, only logical, as the sellers will need a risk premium baked into their trade. They may have had access to an offshore account where they bought the Bitcoin and have now brought it onshore in order to sell it. Apart from that, I personally happen to think that the ban is likely to have the reverse effect that the leaders intend. Once Nigerians see that their government cannot ban a decentralized currency, it is further going to draw their attention to it. Moreover, as mentioned earlier, Nigerians struggle to get traditional bank accounts, and if they are able to see the ease with which Bitcoin can locally be traded, they may opt for that as their store of value. The main impact that the Nigeria Bitcoin ban had was to spook foreign investors who were looking at bringing capital into the country. This view was shared by the founder of an exchange in Nigeria. In fact, it's a view that was also taken by the country's former vice president. He stated that, quote, "This is definitely the wrong time to introduce policies that will restrict the inflow of capital into Nigeria." Preach, my man. So, my feeling of what is likely to happen in Nigeria is that it will supercharge the peer-to-peer trade, although Bitcoin prices may be a bit higher than usual. The central bank will soon realize that its ban was ineffective at best. However, it's equally likely that it drives more Nigerians towards that decentralized future. Now, the broader question is, of course, what could these bans mean for the global price of Bitcoin? Well, I happen to think very little. That's because of a number of factors. Firstly, you have to ask yourself whether either of these bans are going to force people in either country to sell. As I've mentioned, it is likely to further illustrate the need for it. Hence, those who hold Bitcoin in these countries are going to treasure it even more. They're holding a rare international asset that they can store on a piece of paper, very hard for the governments to seize. So there is unlikely to be any selling pressure in these countries. The main negative price impact that this has had on the Bitcoin markets is the FUD that surrounds it. Right after the RBI announced the ban, the mainstream media pumped out article after article, which of course had an impact on the price. However, after the markets had digested the news and realized it to be FUD, they rebounded to all-time highs. Although, to be fair, we did have a little help from our boy Elon with his Tesla purchase. Further evidence that you need to see that this is all FUD is the long history of the Bitcoin price with the China bans. You have a period of price volatility where the market digests the FUD and people ponder the long-term impacts of the ban. That initial Chinese ban came in September of 2017, when Bitcoin was worth about $4,000. I bet you would never have guessed that we would have crossed $50,000 3 years later, especially after reading articles like all of these. I have a theory that after these bans were announced and FUD filled the air, large Chinese whales were gobbling up some cheap sats in the OTC market. They knew the value of Bitcoin and that no government can really ban its use. So, I happen to think that once these Indian and Nigerian bans play out, the impact on the price will be minimal. Yes, it will make crypto users' lives a bit more difficult in those countries, but it could also further convince them precisely why Bitcoin is their salvation. That's it for most of my analysis, folks. So, time for a few of my closing thoughts. The bans by the Indian and Nigerian governments are being implemented not because they care about the risks posed to the average citizen. They are a veiled attempt to restrict financial freedom from the people who need it most. They are the first step in a broader plan to foist their centralized government shitcoins on their populations. Indeed, I would not be surprised if this was only the first in a line of other countries that try to limit decentralized crypto to launch their own CBDCs. However, as I have shown, these plans to ban are not very well thought out. They are trying to restrict an asset that is anti-fragile and uncensorable. One that has stood the test of time and continued its monumental rise, even in the wake of previous bans. So, in the medium term, these bans may make it difficult for local traders to get their hands on Bitcoin, but the local markets will adapt. they will move to P2P trading and possibly thrive. It has further brought attention to crypto in those countries, which will do wonders for adoption. These bans are also going to have no fundamental impact on international Bitcoin markets. Yes, there will be periods of FUD where the news media yearns for your clicks on their doomsday headlines. This may lead to some volatility, but at the end of the day, it's honey badger money, and the honey badger doesn't give a f***. That's it, my fellow cryptonauts, my video on those crypto bans. But I would love to hear your feedback now. What do you folks think will happen? And do any of my Indian or Nigerian followers want to opine? I'd love to hear your take on the matter. Use those comments below. While you're looking down there, you may also want to check out my dedicated socials page. This has links to all the other places that you can follow me for the content that you're not getting here. For example, it has my Telegram channel for daily market insights, Twitter for my take on the markets, Instagram for some memes and behind-the-scenes views here at the Bureau, and, of course, the creme de la creme, my weekly newsletter. Now, this is my once-weekly email where I give you coin picks, reviews, and other news. I also share my personal portfolio in it. So yes, be sure to check all of those out. And one last thing. If this video was to your liking, then do some liking. Don't leave that subscribe button hanging either. It may get jealous. And go on, hit that bell. You know you want to. I'm off to work on my next video. So, till next time, folks.